This video comes with a warning. It is one of our Geek videos that are for people who are interested in the nuts and bolts of performing a Hurst cycles analysis. And so if you are not a Hurst cycles enthusiast and you are not interested in developing your own analysis skills, then you might find this video a little bit dry. In this video, we are going to be taking a look at a chart of gold, and we're going to be discussing the concept of fixing your analysis. So let's take a look at the chart. Here it is. Now, this is a chart that was emailed to us by a Sentient Trader user, and their question was, how can I fix this analysis? Let me explain what I mean by fixing the analysis. Here is an 80-day cycle trough in gold. I should point out that they first of all sent us a screenshot, and so this was what they were looking at on their chart. We have an 80-day cycle trough over here towards the end of July, and over here is the next 80-day cycle trough. Here you can see the neat nest of lows, which is centered around about today. There is a slightly displaced circle for the 20-week cycle. That's a little bit to the right over there, as you can see. But the point is that this is a 20-week cycle trough that is expected according to this analysis. Now, here is why this particular person thought that this analysis needed fixing. There is a very obvious trough over here. There is a nice clean bar down below. It gapped down over a weekend, as you can see, and prices then, since that point, turned up again. Very importantly, it dropped below the 40-day FLD, and here it crossed back up above the 40-day FLD. Not only that, but it also, as you can see, last week crossed up above the 40-day cycle VTL. Now, when price crosses above a downward sloping VTL, it confirms that a trough of the cycle 1 degree in magnitude greater than the VTL, in this case, of course, the 80-day cycle, has formed a trough in the market. And so, by virtue of the fact that price has crossed above this 40-day VTL, we can confirm that an 80-day cycle trough has formed in the markets. And yet, this 80-day cycle trough, as you can see, according to the analysis performed by Sentient Trader software, is still over here in a nest of lows expected about almost 2 weeks later. So how do we fix this? In other words, how do we tell the software that the 80-day cycle trough should be over here? One thing that we could do is we could perform pinning, which is a process of influencing the analysis. But before we even get there, there are several important considerations. And in this video, we're going to be discussing how you can fix an analysis that you think might be wrong. Let's first of all hide our FLD and our VTL. The first very important thing to consider, whether you're working with Sentient Trader or simply performing a manual analysis or taking a look at your trading platform and positioning markers for the position of cycle troughs. The first important thing to bear in mind is that you will often need to consider a slightly bigger picture. In this particular example, we have an 80-day cycle trough over here. Is that the correct placement for the 80-day cycle trough? The important point is that when you are looking at a nest of lows such as this, and you're saying to yourself, but that nest of lows should really be under that trough. In other words, that trough has already occurred. Instead of trying to force the software or influence the software to position this trough here, first ask yourself, why is this nest of lows in this position here? The answer to that question is always because of the position of the previous troughs. And in this case, it is, of course, the position of this 80-day cycle trough. So the first thing that we need to do is ask ourselves not why is there no trough over here at the beginning of September, but why is this 80-day cycle trough over here? And we can answer that question by simply zooming out. If we step back 10 bars at a time, you will notice something interesting. If we measure the number of days up to this 80-day cycle trough, that is 48 days. That is, of course, very short for an 80-day cycle, the average length of which is 68 days. So we have a short 80-day cycle. If we count the number of bars up to this point over here, you can see that there have been 88 days. Is it possible that, in fact, the 80-day cycle trough should be positioned over here? It would then be a late 80-day cycle. Yes, it is possible. This is the kind of thinking process that you need to go through. But before we even consider whether the correct placement for this 80-day cycle trough should be here or should be over here, we need to ask ourselves, are we confident about the placement of this 40-week cycle trough over here at the beginning of June? As you can see, to the left of that trough, we are only seeing a few weeks. Is it possible that this 40-week cycle trough is also in the wrong place? And so instead of inching back 10 bars at a time or 50 bars at a time, what I'm going to do now is zoom all the way out. And so I hit the zoom reset button and we take a look at the full chart of gold. You can see that we've got data going all the way back to 1990. Let me change this to a monthly chart. It makes it just a little bit clearer. And we are ignoring data before the year 2000, which is fine. So we're going to zoom in. We're looking at a good 23.5 years worth of data here, and so we have a lot of data to work with. Whenever you have an analysis question, I would recommend zooming all the way out to take a look at the bigger picture. Let's consider this analysis, and it's a very simple thing that we do at this point. We have a look at the big cycle troughs. In this case, of course, we have 18-year cycle troughs, although we're using a different nominal model here, so we're not going to delve into that in this video, but you can see that the average length of this 18-year cycle is in fact 14.5 years. I think that we're working with 7-year and 14-year cycles here. That's a detail we don't need to worry about too much at the moment. The important thing is that we take a look at the longest cycle that has been found in the analysis, and we consider whether the positioning of those cycle troughs is appropriate. Yes, it does seem to be appropriate. And if we take a look at the number of bars that elapsed between that trough and this trough, you can see there were 14.78 years. As I mentioned, it's a 14-year nominal model, so that's pretty good. 14, almost 15 years in between those two cycle troughs. And so that's pretty good. So we can step down to our next longer cycle, which is, of course, this 7-year cycle over here. Normal nominal model would be a 9-year cycle, but it is in this case a 7-year cycle. Again, are those troughs positioned beneath suitable and appropriate cycle troughs? Yes, they are. They are both very clear cycle troughs, and so things are looking good. Furthermore, we can see a good and fairly clean M shape that elapsed for this 7-year cycle that played out between 2015 and 2022. And so I have some confidence in this analysis, certainly all the way up to this trough in 2022. So let's zoom in and consider what has happened since then. And I've changed the resolution to weekly. This is the analysis that we have following this trough in November of 2022. If we measure the number of days that have elapsed from that November trough in 2022 until this 18-month cycle trough, you'll see an interesting thing. We have only 337 days, or 48 weeks. Is it not possible that this is in fact a late 40-week cycle that formed over here? It certainly is possible, but now we're not going to go down that little rabbit hole at the moment. The reason why is because we have a very good clean M shape that played out into this cycle trough over here. Whether we're going to call it a short 18-month cycle or a long 40-week cycle is really a matter of semantics. We're not too worried about that for the purposes of this discussion. Sometimes people find it disconcerting that I can put aside concerns about the exact magnitude of a cycle. But the reason I do that is because I think that too much attention or too much time spent in those sorts of details can distract from the bigger picture. For now, I am happy that an important cycle trough did form over here in early October 2023. Since then, we have seen another M shape elapse into this trough. Now, here is the 40-week cycle trough that we were looking at a moment ago. We could discuss the exact magnitude of those cycles, but I'm not going to worry about it for now. I am confident that this trough over here is at least a 40-week cycle trough, or it might indeed be an 18-month cycle trough that formed at this time here. But now let's focus in more detail on this cycle trough. Can we be absolutely certain that this position for it is the correct one? Should it have occurred a little bit earlier or a little bit later? Let's zoom in and consider that in more detail. And here we see the likely cause of the difficulty in this analysis. Remember that our discussion started with the fact that we had a very nice nest of lows over here for the 20-week cycle, and yet here is the cycle trough that it seems almost certainly formed about 2 weeks earlier than expected. I pointed out that instead of immediately trying to influence the software to position that trough there, we need to understand why the nest of lows is where it is, and we do that by considering the position of the previous cycle troughs. In this case, it was the 80-day cycle trough over here. Is the 80-day cycle trough really there, or should it be here? Or what about here? And in terms of determining the position of the 80-day cycle trough, we need to then consider the position of this 40-week cycle trough. Because here again, we have another possibility for this 40-week cycle trough. Notice these two troughs that are almost equal. And there is another possibility, which is this position over here. Performing a Hurst cycles analysis is a matter of constantly solving these puzzles in terms of where you can position these cycle troughs. So how do we go about fixing this analysis? How can we produce an analysis that will provide us with the expectation for this fairly obvious cycle trough over here at the beginning of September? What I'm going to do is measure my bars back from this point over here. And we're going to be looking for numbers that have some meaning to us. 39 days back to this trough here. That could possibly be a long 40-day cycle. What about this trough over here? 34 days. That is exactly the average length of a 40-day cycle discovered by Hurst. Of course, we're working with a different nominal model here, and so this is also a possibility at 29 days. Let's keep measuring back to the position of the 40-week cycle trough. According to this analysis, that is now at 88 days, which is either a very long 80-day cycle or a short 20-week cycle, perhaps an impossibly short 20-week cycle. We can extend further back over here and we find 123 days. Possibly this is where the 40-week cycle trough should be positioned. So what I'm going to do is I am going to make a mark over here. I'm going to add a question mark for the position for the 40-week cycle. Of course, we also have this possibility, which is the possibility that the software has gone with, and we have this possibility for the 40-week cycle. Now, at this point, I could create more charts and I could have alternate analyses. I could influence the analysis to position the 40-week cycle in each one of these three positions and compare them. I would encourage you to do this because keeping an eye on possible alternate analyses is very important, and in this case could have helped us to identify this cycle trough in advance. In other words, well before it happened, rather than recognizing it a week or 10 days later. But for now, I'm not going to create new charts. That would simply take too long. What I'm going to do is a very simple process. I am going to see whether I can identify cycle troughs that would match these question mark positions. Let me explain what I mean. When you're performing a Hurst cycles analysis, you will position your longer cycle troughs. In this case, it is a 40-week cycle trough. Could be an 18-month cycle trough, but let's call it 40 weeks. We will consider each one of our question mark positions for that 40-week cycle and ask ourselves where we would then position the 80-day and the 20-week cycle troughs that followed. So let's do that. To start with, we don't really need to work it out for this central question mark over here, because that work has already been done for us by Sentient Trader. As you can see, it positions an 80-day cycle trough over here. I have already measured that. It's 48 days. It's very short for an 80-day cycle. It's not really a very comfortable position for that 80-day cycle. And of course, the big problem is that the next 80-day cycle is expected to occur over here about 2 weeks after this obvious trough that we are aiming to identify. And so that central question mark position results in this analysis, which is not ideal. Let's consider this first question mark over here. If we measure from this first question mark all the way up to this trough over here, the one that we want to identify, we get a number of 123 days. That could very well be the position then of our 20-week cycle. But what about the 80-day cycle that needs to come in between? Half of 123 days is 61 and a half days. Let's come back to 61 and a half days, and you will see that 61 days is over here. Now, is it possible that we had a short 80-day cycle of only 53 days? And then we had a long 80-day cycle of 69 or 70 days. It certainly is possible. And so that is one very viable possibility. I'm going to place a tick mark over there. Now let's consider positioning the 40-week cycle trough over here. If that was the situation, then if we measure the number of bars over here, we would have at exactly 69 days an 80-day cycle trough forming. The average length, of course, of an 80-day cycle is 68 days. So that's a really good position for that 80-day cycle. It would have come in only 1 day after the average length discovered by Hurst all those years ago, according to his standard nominal model, of course. And what about the midpoint, which in this case would not be an 80-day cycle, it would in this case be a 40-day cycle? We would be looking for a cycle trough at around 34 days. And here are two possibilities, one at 30 days or 29 days, and another one over here at 35 days. And so, again, this is a very likely possibility. And so we have two alternate positions for this 40-week cycle trough. One is just a few weeks earlier, and the other one is just a few weeks after. Which is the correct one? Well, here is the bad news. We don't actually know with any certainty which is the correct one. But again, by performing some simple analysis processes, we can make an attempt at answering that question. Here are our two possibilities, either here or here. So let's go back to this trough over here in October of 2023, and we're going to measure our bars from there. Here we have 212 bars, 210 bars. That's not really a very good number in terms of it doesn't really match any of the nominal model cycle lengths that we are used to working with. It's 30 weeks. There could, of course, be a 30-week cycle in gold, and there are analysts that suggest that there is such a cycle. If we position the 40-week cycle trough over here, or we might want to call it a 30-week cycle trough, but no matter what we call it, if we position the larger cycle trough over here, that's at 211, 210 days, then we would expect at about the halfway mark, in other words, at 105 days, for there to be another cycle trough. That would then give us this position over here for another cycle trough. So that is possible. But let's take a look at our M shapes. We've got some very nice clean M shapes over here, haven't we? And if we want to position a cycle trough over here, that's not quite so easy. We get 3 parts of an M shape, or in other words, 1.5 M shapes, and then a cycle trough. It's not really very comfortable. So let's consider our second possible position. If we measure again from our 18-month cycle trough up to this position, you can see we get 264 days. Now, the average length of a 40-week cycle discovered by Hurst was 272 days, and so only 8 days early, this potential 40-week cycle trough formed. Let's split the cycle again and measure to the halfway point. That would in this case be 136 days. So let's measure back 136 days, and we get this trough over here. That, in my opinion, makes a lot more sense. Let me explain to you again why. Measuring from an obviously prominent trough, we found that this trough over here had a variation of only 8 days from a nominal cycle length that has been used for 50 years to analyze these markets, including, I should point out, gold. That is in fact a variation of only 3%. When you see a cycle trough positioned with only 3% variation from the nominal cycle length, that is often a sign, not always, but it's often a sign that that's a good position for that cycle trough. Furthermore, we have at exactly the midpoint this cycle trough over here. And so by positioning the 40-week cycle trough over here, we would have two very well positioned cycles. We've got a nice clean M shape over there. We've got another nice clean M shape over there. And so this cycle trough position is, in my opinion, the winner. And so what I'm going to do is I am going to pin the 40-week cycle trough to this position over here. That is a very simple matter of double-clicking near the 40-week cycle trough, right-clicking, pinning that cycle trough to that position and saying yes. I will pause the video while the analysis is updated. And there we are, the analysis has completed. There is the pin symbol to remind us that the analysis has been pinned, it has been influenced by us. And if we slide this chart over to the left, we can see what has happened with the analysis since this new 40-week cycle trough in June of this year. And here is the 80-day cycle trough that is now positioned over here where we wanted it at the beginning of September. Here is the 40-day cycle trough over here towards the end of July. And so we have achieved what we set out to do, which is to fix the analysis in terms of positioning our cycle trough at this very obvious to us, with our advanced human brains, position for the prominent trough, in this case an 80-day cycle trough. And so the important message is when you are wanting to fix an analysis, or particularly position a cycle trough that Sentient Trader seems to be ignoring, very often the best approach is not to start trying to pin that cycle trough at that position over there, but rather to zoom out and to understand why it is that Sentient Trader is positioning a nest of lows where it is, or why it is that it is not positioning a cycle trough in the position that you want it. As a general rule of thumb, it is better to pin or to influence the analysis at the longer cycles than at the shorter cycles. And so although we wanted to position an 80-day cycle trough over here, by pinning the 40-week cycle trough we have achieved that, and that is a generally more robust and appropriate way of dealing with the problem. I do hope that you found this Geek video useful. I wish you happy analysis and profitable trading.